if someone wants to prioritize this, like how do they start looking for ESG funds, and how do they start looking for, like, specifically, where do you find them, and how do you like parse through what's in them?
Yeah, so the easiest way, I think US News has a list of popular ESGs that you can kind of thumb through. I would start there. But the thing that you really want to pay attention to is anytime that you go and look into these ESGs, you can either do this on Yahoo Finance, or you can go to the website itself, look at the top 10 holdings of it. And there's usually an option to either download the list if you want to go that deep into it, where it'll show you every single company that is invested inside of that ESG. And that gives me a good indicator of how sound how I feel about the company. And again, you're going to have to draw a line for yourself. So for example, the fund that I was mentioning earlier, it had like 0.25% of the money inside of Wells Fargo. So I had to draw a line. Is it, is that tiny sliver important enough for me to say no to the entire thing? Or is that something that I'm just going to deal with it compared to something else? So you always want to take a look at what is the criteria, what companies are in there, and then whether or not that meets the threshold for your personal values.
What's your beef with Wells Fargo?
Well, I'm glad you asked. So Wells Fargo was sued for discriminatory lending policies not too long ago. And they really preyed on Black and brown communities, and specifically went to Black churches to sell subprime mortgages and loans, charging them more than what they should have. Not to mention the entire fake account scandal that they just recently went through just a few years ago. So that's just a few things with Wells Fargo specifically. Mm-hmm. But, again, like drawing that line, technically I could say any bank, right? Any large bank. So you really have to kind of sit and say, like, here's how I feel about, my values and which funds fit for me.
Yeah, it's hard. I mean, you have to sort of go through like each one and do a bunch of research on what is important to you and what it means to you. And then in terms of capitalism, you're always, by participating in it, you're always making some sort of concession. And like you're always sort of judging, okay, this company has a good grade here, but not here. But like this fund, has everything I want except for, like you said, a tiny part of it is Wells Fargo. Like, so I was like, is this conscious capitalism? What is this? Is there such a thing?
It depends on what part of this. So I studied economics. So when someone says capitalism, I have like the textbook definition versus like what we feel, right? Which is very, very real. I think this would fit into what most people would consider conscious capitalism to a degree that I can impact, right? Like I could go through individually and pick 50 companies that I personally believe in, make my own fund technically, right? But that's a lot of research. That's a lot of risk, right? So it's like, how can I find a good middle ground that I think helps the overall good? And I think this is, an easy way to do that and just progress forward to get as close to that as we can.
Yeah, like you're choosing, so yeah, you said it's risky. Can you explain why a fund is less risky than, like you said, going through and picking 50 companies that you believe in?
Yeah. So it's really, the old cliche of putting all your eggs in one basket. And when you are picking a fund, you are spreading out that risk, because what I may love and believe in, I could be wrong, right? And every year the economy changes, every year the market changes. So you're really spreading out that risk and saying, look, I'm putting my money, my future earnings in retirement in different buckets so that if things don't go the way I expect them to, I'm going to be okay, as opposed to putting everything in one basket and that thing not doing well, and that puts me at risk.